All right. Good afternoon, everyone. How are you all doing today? Can you hear me okay? See me all right? Let me know. Put it into the chat. Thanks for that, Jan B. And how is everyone else doing? Hey, we'll give it a couple of minutes before we get started. And while we're doing that, if you're new to the session, put it into the chat. Let me know where you're joining me from. And also, hit that like button. Smash it over and over again. Hey Simon, how you doing? Kettle's on. Well, kettle's not on, but the Coke is in hand. Hey Jamilu, how you doing? Finland, wow. How you doing in Finland? I hope you all have been trading well. I've seen a lot of requests and wonders about questions about when we're getting this live market analysis back up again. We are here at the start of the week, getting you prepared, well ready for the week ahead. So I hope it helps with your trading journey. Hey Desiree, it is now on Mondays. We start right on Monday, get you informed, get you prepared for the week ahead. Thank you for the gift as well, Desiree. Been munching away in the office, gaining weight. How about everyone else? Hope you're all well. Today we are here with IC Markets at a webinar going through the live market analysis. I will be looking at the potential news to be released, potential market setups, price movements, do a bit of a review of what happened last week as well. On Friday, we had a non-farm payroll. So we'll do that. And if you do have any questions at any point in time, hey, remember, please put it into the chat. Let me know. I'll be happy to answer your trading related questions at any point in time. Hey, Advocate. Good morning to you. Good afternoon, evening to everyone else, wherever you are in the world. I am still coughing, but one more minute and we shall get started. Again, if you are new to the session, welcome to the session. Let me know where you're joining me from. I'd love to find out. Alrighty, let's get started. So welcome again, everyone. Thank you all for attending this session, IC Markets webinar, live market analysis. What we'll be doing today is we'll be looking at what happened last week, a quick review of what happened last week, how prices moved, and then I'll be looking into the news and what could happen this week's, possibly identifying some potential trade setups. Basically, we've moved this to Monday just so that we give you all the good information, get you well prepared, highlighting the potential hurdles and dangers ahead, just so that ideally this will help with your trading and make it more effective, make it more profitable for you as well. Okay, so for all the regulars, you know the drill. If you have any questions, please feel free to put it into the chat at any point in time. I'll be happy to answer your questions as it pops up. With that, you all know we have to do a quick disclaimer. Any information contained in this webinar should not be construed as advice and is presented as educational material only. International Capital Markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. This is really important because what happens is that I will be looking at many different charts, many different possible trade setups, if you do jump into any trades, or if you do look to jump into any trades, please make sure you do your own due diligence. Make sure it fits with your own trading strategy, especially that you're not over trading, over leveraged. What tends to happen is that we look at so many charts, look at so many potential trade ideas. You don't want to be jumping to all of them, because that would definitely mean that you're over trading. All right. Through my experience, what I've seen is that is not so much the one or two bad trades or the trading strategy that gets a trader into a lot of problems. It's more about over trading or not managing your risk properly. So make sure you check that before you jump into a trade. All right. And if you are relatively new to trading, and you've seen the setups or the discussions here that we go through, maybe what you want to do is test it out, right? Try it out, put it on a demo account, look at how the trade runs. Then after that, build that confidence, build that information and expectancy of the trade before you start looking into jumping into live trades. Okay. With that quick introduction of myself, you all know me already. My name is Jin Dao. Most of you know me as Jin. I'm one of the external analysts here at the Everest Fortune Group award-winning research team, Technical Analyst Award finalist for Best FX and Equity Research 2019, 2020, and 2021. In my previous time, I have also previously managed a multi-million-dollar FX fund. I have been trading for 15, I always say 10, but it's almost 15 years now already. So, if you have any trading related questions, let me know. I'll be happy to try and guide you through your trading journey, share with you my experience and viewpoints as well. Okay. Hey Samuel, how you doing? Hope you're well. It's been a long time. With that said, let's jump straight into it. Take that away. Hey Suki, hope you're well. Good to see you. Thanks for saying hi. Okay, so as you all know, the way I look into charts, or before I look into my trades, what I do first up is I always check the news. I do it a little bit differently compared to most other traders. I look at the fundamentals first, right? Identify where I think prices should be heading, the overall direction of buyers. Then after that, I look into the charts to make sure that the price movement aligns with the fundamental expectations. Then after that, I look to get into a trade if it aligns. If it doesn't align, then I'll identify possible setups waiting for price to bounce off a key level before getting into a trade. Okay, so just giving you a quick review of what happened last week. Most importantly, on Friday last week, right? On Friday last week, we had big news. Actually, what I'll do is I'll do the whole week instead of just focusing on Friday. All right, we started off the week in a brand new year. So again, happy new year to everyone. Does that sound better, Suki? I'll move the mic a little bit nearer. I think it might still come out from the left side, so put in two headphones. We're still trying to sort out that issue. All right. So on Monday, we started off the brand new year. Great trading. Looking forward to great trading setups in 2023. Again, happy new year to everyone. Not a lot of movements on Monday, but what we saw on Tuesday, again, no news, but as the markets reopened, as we saw the US markets coming back into action, we saw a lot of price volatility early on, right? Early on. Again, not a lot of news. We saw the Swiss CPI data being released. Didn't move prices too much. In fact, I'll show you here on the charts first up, just to share with you what happened. Oops. Take that away for now. What's happening here? Something odd. Okay. So the dollar index, you can see if I looked at it on the H4 time frame. Where's my crosshair? Okay, there we go. you can see that on the early session on the 3rd of Jan, you can see right here, price shot up. The dollar index strengthened significantly from that 103.55 level straight up towards 104.80, right? Big push upwards on the dollar index as market volatility, market liquidity returned. But that move wasn't sustained. We saw that big retrace before a push up again on Thursday, right? What happened in between these periods and then a big drop on Friday was, you can see again back to the charts, not a lot of news causing this price movement, right? It's more because of the return of liquidity to the markets. On Wednesday, we had CPI data for the Swiss was 0%, expected a minus 0.1%, came out at a minus 0.2. Didn't move prices too much, despite the dollar index strengthening quite significantly. We saw the JOLTS jobs opening, very strong number. PMI number for the US manufacturing PMI just slightly lower than previous, was 49, came out at 48.4. Pretty much as expected. That's why we didn't see too much price movement. Meeting minutes was very important. Well, actually, no, it was very highly looked upon, right? Anticipated. Markets were thinking that they were going to see clearer identification of where the FOMC were planning to push interest rates to. But what we actually saw was that the Fed's highlighted that they were not ready. They were unlikely to start looking to reduce rates. They were looking at possibly higher rates for longer. So you can see here, Fed officials see higher rates for some time ahead. So that whole idea of possibly a pivot from the FOMC didn't come around, and that's why you can see on Thursday at 3 a.m., again coming back to the charts, on Thursday at 3 a.m. early, you can see that it stopped moving, it fluctuated a little bit, and then after that, that push on Thursday morning, that push towards the upside, right? Anticipating that the Federal Reserve were not going to start slowing down or not going to reduce rates, looking at further rate increases, we saw the dollar index push from 104.27 towards that 105.25 level. So a big strong push early on Thursday morning because of the meeting minutes. Markets digested and traded on the expectation that the Fed Reserve or the US Fed Reserve were not going to slow down on rate increases, but in fact possibly looking at maintaining the rate increases for some time ahead into the future. So that was early Thursday morning. And then after that, we saw ADP non-farm employment change. ADP is a private number, right? A private calculation of the non-farm employment change data was very strong. 182 previously, it was revised from 127. So we got revised upwards. Expected 152, came out at 235, right? So a very strong ADP number showing employment data was still very strong or anticipated to be very strong in the US. So because of that, we saw some volatility in the dollar, but the main event for last week was the US non-farm employment change data to be released. And that was released on Friday, first Friday of every month, right? The non-farm payrolls are released first Friday of every month at 9:30 GMT plus 8. What we saw was it was 263, got revised slightly downwards to 256, expected 200. So expected a modest, slow increase, but it actually came out at 223. Positive, strong employment change data there for the US in terms of the non-farm payrolls. But more importantly, unemployment rate went from a 3.6, right? It was a 3.7, so it went from 3.7 Expected to hold at 3.7, it dropped to a 3.5. So quite a significant drop, 0.2%, quite a significant drop in terms of the unemployment rate. That alone, those two data alone should have given that dollar strength. But average hourly earnings slowed down from a 0.6% to a 0.3%. So a slowdown in wage growth, possibly indicating a future slowdown in inflation growth as well, right? So if we're thinking that employment numbers are strong, wage inflation is slowing down, possibly leading to inflation or CPI data slowing down as well, that led the market to start reconsidering again that the Federal Reserve could again slow down future interest rate hikes. Okay, so as much as they have been talking about, in the recent minutes release saying that no, we're not looking to slow down, we're looking at further rate hikes for longer. As the data gets released, this led to the expectation that the Fed Reserve might change their tune, right, and look into slowing down on future rate hikes. That's actually really important because what happened here at 9:30 GMT plus 8 on Friday evening, you can see right there, the dollar index pretty much went straight towards the downside. I'll change this again. Let me switch this over. Okay, so you can see right there at evenings on Friday evening, it went from a 105 as high as 105.62 straight down onto ended the session at about 103.86. Massive weakening in the dollar index as markets started considering that the Fed Reserve would slow down on their rate hikes into the future because of inflation, wage inflation slowing down, and also because of possibly strong economic activity and employment data, which gives it more confidence that the market is performing well, economy is performing well, and that eventually inflation will slow down. Right, so they're looking at possibly interest rates hikes going to slow down. We saw that move lower continue on through today. It came down to a key level. Right, it came down to a key level here at about this 103.44 or 103.40 level. Okay, you can see it came as low as on Thursday in 2022. We hit at 103.45. It came down, hit that level, and bounced slightly again. So right now, the dollar index at 103.62. Main thing to look out for is what could happen from this point. Is the dollar index going to come from here and turn down, break that support, and hit significantly lower, or do what it's been doing for the last 3 times, right? 1 time or 2 times. It's hit the level, hit that 103.45 level, and bounced strongly towards the upside. Again, just last week, bounced strongly towards the upside. Put into the chat, guys, what do you think is going to happen on the dollar index at this point? Do you think that it's going to bounce off this 103.45 level? Or do you think it's going to consolidate at this point before trading lower again? What do you think? Here, Arfan, I will get to gold shortly, so bear with me. Everyone else, what do you think? Is the dollar index going to bounce off this support level or trade lower, break through 103 and trade significantly lower? Tariq says consolidation. Suki says breakthrough 103. We are 50-50 for now. What about everyone else? Jambi says going lower, triple bottom reverse. Hey, got everyone watching. Come on, guys. What about everyone else? Looks like a short time weakness. All right. So that was a trick question. I think a lot of you know why I asked that question as well. It's not so much of what could happen there. This is purely a technical view at this point, given that price has hit a support level. There are going to be other reasons why we think that the dollar index could either bounce off or break through this level. I'll highlight to you where or when I think that's going to happen. I think that I would agree with who said that? Tariq. Right, I'll agree with Tariq that it's possibly going to consolidate between this 103.45 and even between 103.80. I think it's going to consolidate in this range for a while. Right, I think it's going to bounce around, consolidate in this range all the way till the next news. Right, so this was last week. Looking into this week, on Thursday, evening, 9:30 GMT plus 8, again, we do have the US CPI data to be released. CPI data being the inflation data, right? The inflation growth data. It was a 7.1%, expected a 6.5%. Expecting inflation growth to slow down again, right? Expecting inflation growth month on month to go from a 7.1 to a 6.5. And if it does come out at 6.5, that is going to show good momentum for inflation growth slowing down. It's getting closer and closer towards the Fed Reserve's target of 2 to 3% in terms of CPI, which is going to again reinforce that market expectations that we could see the Fed Reserve slow down, pivot on their interest rate decision. Okay, so I think it's going to consolidate. We're going to see it spike around for now, but the main driver of the dollar index is going to come on Thursday, where with the CPI data to be released was 7.1, expected 6.5. Can show you the last time, December 13th, it went from 7.7 to a 7.1. All right, so on December 13th, you see here, when the news got released, we saw a big push towards the downside with 7.7 to a 7.1 data. So I think we're going to see it fluctuate around this point and possibly onto, oops, take that away. And possibly onto Thursday, we're going to see it break below this point. If we're anticipating a similar move to what happened here last year, 13th December. Okay, so if it does break below 103.45, where could the dollar index head towards? Zooming out right across. Actually, what I'll do is jump to the daily time frame. Okay, so if it breaks below 103.45, the next key level would be at about, firstly, at 102.50. 102.50, where we saw that breakout towards upside, and then after that, ultimately the swing low at 101.35. I don't think that the dollar index is going to drop that significantly towards 101.35. So, looking at this, zooming in for you to see a bit easier, we could see price bounce around here, and if it does break below that 103.45 level, we could see it break down towards that 102.52 level or 102.50 level. Fair enough? Makes sense to you all? Let me know. Kuban, share these setups in the VIP. I will. Right? I'll go through the setups and then I'll share it in. Or if you want to, you can also, put in the setups and let me see how you can ask the questions there as well. I'll be happy to look at the setups and then I'll give my comments. Looking for you to contribute to the VIP rooms. There's a region. I feel you can set exam questions for us. Hey, I will set an exam question. Will you do the exam? We could do that. That would be fun. Alright. Okay, so that's the anticipation for the dollar index possibly going to bounce within this range. And then maybe with the CPI data, if it does come out at that 6.5% as expected, indicating a slowdown in inflation growth, then we're going to see possibly that dollar index drop further. Okay, which pretty much would govern or align across all the pairs if I were looking to trade. For now, I'll be looking at short-term trades all the way to Thursday, and then we could see some big, strong breakout potential. What do I mean by big, strong breakout potentials? All right, the U.S. yen. Okay, U.S. yen right now, it's dropped, it's bounced off, it's tested that 131.72 level, or you could even say it tested that 131.50 level, and is bouncing towards the upside. What I'm anticipating here on the dollar, on the US yen, as we expect the dollar index to bounce around, possibly testing a little bit towards the upside. We have a good strong key level here at 134.45 or 134.50. What I'll be looking at is whether the US yen could climb up, hit that level, but I'll be looking for that selling opportunity. Right? Selling opportunity in this case, selling towards the downside, let's say below 103, no, below 134. Stop loss. Oh, this is terrible. Why is it so big? Let me just fix this a little bit for you guys. Okay. So if you're looking at about 134, stop loss about that 70 to 80 pips, take profit about a good 230 to 40 pips towards the downside, almost a 1:3 risk reward ratio on the US yen. And if it does break below this 103.50 level, then we do have the next key support level at about 130, which would be a good strong round number support level that you could be looking for a second trade towards the downside. All right, Alpha. Now I will get to gold. Don't worry, I'll get to gold there shortly. Okay, so US yen looking for this to push up to test that resistance level of 134.45. If we see that rejection, I'll be looking for that selling opportunity back down, firstly towards 131.50 and then towards 130. Very similar to what happened here on the 29th, where we saw that big downward move, and also on the 6th of Jan, where we saw that downward move. So key support levels in play at this point. All right. Yes, 70 pips on H4 time frame. Fantastic. Good for you, Thomas. All right. So with that, then let's answer Arfan's question about gold. I wish I had better news for you here, Arfan, but what I'm looking at in terms of gold is that if I zoomed out right across, okay, and I did that, you'd see that we have a bit of a upward trend line towards upside, right? It's been supported, and this has started since the 23rd. It's supported, bounced off on the 28th, right? It started here, it's bounced off the support level and bounced off again and it's pushed higher. Good level here. Arfan, where did you sell gold at? Where did you sell gold at? I do have a level here at about 1861 or 1860. Right, why I have this level was that previous swing high. It hit this level and turned back down. But then very recently on Friday, because of that dollar weakness, we saw this push bounce off that diagonal trend line, push up, break above 1860, went as high as 1880, and right now retracing slightly. Why is it retracing? because as we have seen, dollar index is also bouncing slightly at that 103.50 or 103.45 level. Okay, has Afan replied about his where did he sell gold at? Afan, where do you sell gold at? What I think could happen here is that the dollar if the dollar index continues, and I'll show you dollar index again, right? If it continues to consolidate in this area, possibly bounce up a little bit, turn back down, I think that we're possibly going to see gold also. Okay, I'm possibly going to see gold consolidate within this range, right? 1880.56 and 1860. You might, okay, again, this is not a trade recommendation. This is, do your own due diligence. But I think that we might actually see this come down slightly, test that support level before bouncing back up again. Right? We are anticipating further dollar weakness ahead. But with that said, we're looking at this possibly turning down before pushing back up. In fact, to be a bit more specific, I don't think it'll come all the way down to 1860, right? Because the dollar, unless it breaks strongly towards upside, it is looking to consolidate. So I think it is likely to consolidate around this range before, if we see that dollar strength or the dollar weakness on Thursday, then we're going to see that break towards upside. So be extra careful there, Arfan. I would be a bit more wary about what's going to happen on gold. I think you would be hoping that on Thursday we don't see the dollar weaken. In fact, we see some dollar strength. All right. But with that said, I would say manage your risk. Look to close out that trade. Look, take the hit. Possibly consider a risk management approach at this point, because I do anticipate that we could see further upside on gold. How much higher? If I went to the daily time frame, zoom right out, you'd see that at about that 1915 level. The last time it came down, tested all these points, a good test of this level at 1915. So in fact, I think if you guys have been following with my webinars and sessions, I have been actually talking a lot about gold pushing higher. I talked about it getting to 1850, 1890, and now and possibly even 1900. I think that momentum this way could push gold towards that 1915 level. Fabio, it is streamed live, so it will be available for you to rewatch after the end of the session. So no stress, no worries. Okay. So I hope I answered you guys on the gold analysis here. Possibly further upside, possibly some consolidation before an upside, especially if we see that dollar weakness come into play onto Thursday with the CPI data to be released. With that, Amar Jamil asked about the euro dollar. Yeah, I tell you that the euro dollar is a trade that the guys in the office were just looking at, and we did enter into some trade there. Okay, so I'll zoom in a bit here to show you. Suki, that's a question. That's a loaded question there. All right. So the euro dollar, again, dollar weakness on Friday saw the euro dollar bounce strongly. Right. I'll show you here. So it was sitting in that consolidation for a very long time. I got so bored of the euro dollar. It was trading between just in a wide range between that about 106 or 105.90 level and about that 107 level. All right, so trading within that range pretty much from mid-December all the way through to early Jan, and then it broke with the market liquidity returning before retracing strongly again. Onto Thursday, as it broke down, I thought, great, it looks like we might see some downside on the euro dollar, especially as it came very close towards that 105 round number level, right? But again, non-farm payrolls saw this push back up, and what you should notice here is that it's hit that resistance area of 107, failed to break higher, with that price action a bit of indecision at this point here, indicating some potential for reversal. Is it going to reverse all the way back down? I'm not too sure about that, but I do think that we might see. Put this in. Oops, what happened to my lines? Right, we might see it come back down towards maybe this point at 38.2% level, right? In the short term before possibly bouncing back up again. Okay, so that's what I'm looking at on the euro dollar. In fact, what I was actually trading earlier just then, before this session, a couple of hours before this session, I was on the H1 time frame, and I actually bought, where did I buy? At about this 106.75. I bought at 106.75. I was trying to get it towards 107. It did touch 107, but I got out early at about 106.95 or 90. So a quick trade, a very small scalp there, because it came to that resistance level and that 107. I think it came up, almost hit, and then turned back down, and I got out my trade. Didn't look like it had the momentum to break above that resistance level, and that's why I got out. In fact, one of our other colleagues actually looked to sell it down, right? So you can see here that the markets are made up of all different participants. I was looking at short-term upside. He was looking at that downward potential, and she sold down, if I'm not wrong, from this 106.85 level towards the downside and hit his take profit as well. I'm sure you all know who I'm talking about, but that was a euro dollar trade towards the downside. At this point, looking like it might come down towards that 38.2 level before bouncing back up again. Wouldn't look to sell it down just because of that strong upward trend. I'll still be looking for it to come down before it turns back up, and then looking for that buying opportunity towards the upside. All right. Hope that makes sense for you, Amar Jamil. All right. Okay, so Jamilu asked about the US CAD. Kelvin asked about the pound dollar. Where's my pound dollar? Alrighty. Straightforward. Isn't that so easy? Straightforward there. Pound dollar it's now just moved up. It's moved up onto my priority list. Want to know why? Main reason is that, very similar to the euro dollar, since mid in December or late December, it's fell into that range. It got capped by that 1.21 level, right? Since early December, it tested 1.21 at this point there. And then after that, as it broke down towards the end of December, it's failed to break higher over several occasions. Finally, with that dollar weakness, we saw the pound dollar push strongly, breaking above 1.21. So right now at 1.2152, what I'm looking for is that retracement before that buying opportunity, that push towards the upside. How high could it go? We know that the immediate level will be at 1.2226 or 1.25. So if you were a little bit risk adverse, you could be looking at a buying opportunity if it does come down to test towards upside. About 1.2130, stop loss take profit about 90 pips. Stop loss just below that support level, about 30 to 40 pips. You're looking at a 1:2 0.3 risk reward ratio towards the upside there on the pound dollar. All right. Can it break above 1.2225? Well, if momentum is there, if we see that dollar weakness continue, then we could see this push higher. I think that it would be a big ask to try and see the pound dollar climb towards the 1.2450 level. But hey, if we see that dollar weakness perpetuate, it's not out of the question. Kelvin, does that help you? Does that answer your question? And with that, US CAD for Jamilu. Where's my US CAD? I can't see it. You're most welcome there, Kelvin. I've lost my US CAD. Hang on. Okay, there you go. So US CAD, fortunately, I have to zoom out because we saw that big reversal, right? From almost the top, right? So through December, we've seen it get resisted by that 1.37 level. Until Friday, we saw the body at about that 1.36 level, and then that big reversal towards the downside. Very significant move because it has broken several round number levels, 1.35, and then it's come down towards that 1.34 round number level. Okay, if I drag this right across, you can see 1.34 was a strong level as well. So with that, one more thing to highlight to you all is that, again, back to the news. On Friday, we saw Canadian employment data very strong. And unemployment rate was 5.1%. They expected unemployment rates to increase to a 5.2, but what happened? It came out at 5. Very strong. So it's not just better than previous, it's a complete reversal. They expected it to climb, it dropped. Employment change data was 10.1k, expected 5.5. Again, expecting a drop in employment change data. It came out at a 104k. So very strong data there, signaling very strong employment in the Canadian economy. With that, we expect Canadian dollar to strengthen. So now that it's dollar index pushed dollar weakness in the dollar, in the US dollar push price down towards that 1.34 level, combined with strong employment data, right now trading below 1.34. I'm looking at potentially further downside here on the US CAD. Looking at that further downside, where can it get to? The previous swing low here at 1.3325 or 1.3320. That's an immediate support level, with the next key low at 1.3230. So in this case, what could you be looking for? Selling opportunities towards the downside. At this point, I would say a little bit too early. We'll look for it to break below 1.3380. Stop loss about 30 pips. Take profit. You could go for 50, almost 60 pips towards the downside. Almost 1:2. And then after that, you got the next one down, about 140 pips towards the downside, or almost a 1:5 risk reward ratio. Hope I answered your question there, Jamilu, on the US CAD. And then, which pairs am I looking out for this week? Suki, I look at 8 different pairs at a time. So I have my dollar index on a chart. I have the US yen. I have the Aussie, Kiwi on top of each other, and then the euro dollar, the pound, the US CAD, the Swiss franc, and gold as well. So I do look at everything, but like I was telling you, the main feature at this point is the pound dollar looking to break out towards upside. And also, I'm actually quite interested to see highly speculative, but quite interested to see if we could see a big, strong reversal on the Aussie dollar. Right, so if I zoomed out here, you can see that Aussie dollar climbed up, and every time, almost every time, it comes to a key level, we see a big retrace. Right, a key level, consolidate, a retrace, consolidate, and then a retrace to a lesser extent here as well, and then a retrace. Right now, looking like it's showing some potential for a retracement as well. So I'm looking at this Aussie dollar for potential retracement towards the downside. Key levels to pay attention to will be at about that 0.6870 level, first point, right, to previous swing highs. And then if it does break below that point, then we could even see it come down towards that 6743 level. This again is fully counter trend, expecting it to reverse, because I don't think, despite the data from the US, I don't think that the Aussie dollar fundamentally should be climbing that high. And also, again, back to the news, I think tomorrow or the day after. The day after, on Wednesday, we do have CPI data for the Australians. Was 6.9, expected to be a 7.3. So again, inflation looking to grow in Australia, which could mean that we're going to see further rate increases. Although they say that the RBA has been a bit wishy-washy about further rate increases, but we're looking at inflation rate growing from a 6.9 to a 7.3. Okay, so if inflation grows, they're going to talk about further rate increases. If they have further rate increases, we could see possibly the Australian economy suffering a little bit more, and that's why we could see that reversal towards the downside. All right, so I do have trend following setups that I'm possibly looking at, and also some speculative reversal setups that might be interesting coming up. Okay. How's the crypto front doing? Let's see. Do we have crypto here? Ethereum bouncing strongly, right? So we've seen that consolidation, that breakout. Ethereum consolidated between that 1240 level, right? Consolidated between 1240 and also 1257. We saw that break out towards right now at 1316. We do have a very strong resistance level there, about 1336, or you would say even 1349 or 1350. So I think, hey, we could see Ethereum climb towards 1350, continuing on with the current momentum, pushing towards upside. Could it break above this point? If it does break towards above that resistance level, we're going to see possibly some very good upside potential. Very similar to what happened in October, as it broke above the resistance to scale all the way towards upside. Very similar to Bitcoin, where we saw it break out of the consolidation. It was previously capped by that 16,900 level, and we saw that breakout right now at 17,240. Again, you can see that that has a bit of a resistance at 17,330. If it does break that, it could see further upside. But there has been news. Let me see if it's here. It's not here. There has been news about another exchange that has gone into let me just get the term right. Yeah. So crypto exchange here, Huobi laying off 20% of its staff, in a bear market has caused some concern. See 60 million token outflows in a day. This was 3 days ago. All that put together could create some hesitation for that upside move. I think that momentum could push it towards the upside, but watch out for this news. If it develops into another insolvency, another liquidation, again, we could see that big crash towards the downside. Not looking forward to that. I'm looking at hopefully some recovery, but you do have to pay attention to the potential news ahead. All right, Kelvin, I hope I answered your question there on the crypto front. Any further questions, anyone else at this point in time? And while you are thinking of a question, remember to click that like button, click that subscribe button, helps with the YouTube algorithm. Fantastic. One more I want to share with you all was the Kiwi dollar. Do you trade 5-minute charts? I do. So how I actually look at charts when I'm trading my own charts is I look at the H4, I'll identify levels, in this case, for example, like these, right? And then if there is a trade, great, I'll look into getting a trade. If not, then I'll look into the H1 time frame, looking for potential early entries, okay, and also shorter term setups. So for example, you can see that this was a good resistance level there. If I were looking at the charts at that point in time, I would have been looking to sell it down towards that 0.6355 level. And then if it doesn't, or if I miss that, then I'll be looking at the M15 time frame first for that downward move, right? So at this point, if I were looking at it to trade on M15, then it would need to break below this 0.6377 level for that quick trade down towards 6355. All right. Typically, I would reserve the M1 and M5 time frame for trading the news events when we're trading news events. Hey Stephanie, how are you doing? Looking at US 30, let's do that. All right, so back to the H4 time frame, US 30. We saw that big, although we saw that dollar drop, that resulted in that big push towards upside on the US 30. You can see that it broke above that resistance or support level, turned resistance level of about 33,400. Right now at 33,734. Looking, right, if we're anticipating that dollar consolidation and then further weakness, this is going to push further towards upside with the next key resistance level at about 34,300. Quite a big move expected here, so I think that we're not going to see this move in a straight line. I'm pretty sure we're going to see this zigzag towards that upside and the key resistance of 34,300. Relatively straightforward there, Stephanie, but it depends on where we're going to see the dollar index head towards first. Said, how can we trade by Fibonacci? Is it possible? Tell us some small time frame strategy trade about Fibonacci. Hey, you can use Fibonacci in all time frames. I would say that you could just trade from a different levels on a retracement on the Fibonacci's. I don't have enough time to get into a clear strategy on that at this point in time, unfortunately. Does dollar look to continue bearish for now until the news later this week? I think we're going to see it consolidate. We should see a bit of a retracement, because it's hit a key support level, so I think we could see a retracement, but likely to consolidate in this range before trading lower again. So you got that right, Zab. And then lucky last on oil. It hasn't done too much, right? It hasn't done too much. Brent trading lower, because of that dollar strength, we saw this drop and then now retracing back up again. I was looking at Brent at that 81, looking for it to break that 81 level strongly. Okay, so I had that 81 level about there. So I saw that it was holding, back in mid-December, 81 was holding quite strongly, and once it broke above that level, we saw a good upside move towards that 86 level. Okay, so I'm looking again, not right now, it shows a little bit of a retracement, but we could be looking at about, maybe if it breaks above 81.55 or 81.60, we're going to see further upside potential towards 86 on Brent, and also very similarly for WTI. Okay, no, where's my WTI? And for WTI, even a bit more clearer here, bounced off a, no, that's not the right price. Where's my WTI? I don't have it here. Okay, well, quite similar on WTI. Let me find that. That's not. That's the one, but no, that's not what I usually use. I can't find it now. But we're still looking at that potential upside there. All right, Jamilu. Okay, so with that, anything else to look out for this week? We do have some Fed members speaking tomorrow night. Central bank independence and the mandate, evolving views. I don't think it's going to move prices too much for that one. CPI data we highlighted already. CPI data for the US on Thursday we highlighted. And then the GDP number for the UK. Not too concerned about this at this point. And then consumer sentiment for the US looking to climb slightly from a 59.7 to a 60.1. So looking at some good resilient data there for the US economy. With that said, any further or last questions, everyone? What do you think about Bank of Japan? Will they increase interest rates to counter inflation? Bank of Japan has not, or is not likely to increase interest rates. What they have actually done is increased, what was the word? Flexibility. If I'm not wrong, it's flexibility in terms of the yield or yield control. So let me find yield control. So it's tweaked its yield control to allow 10-year bonds, 10-year JGBs to rise to 0.5% from a 0.25. So it is given that margin for the yield to climb higher rather than to maintain at a 0.25. So they've almost looked like they have done a interest rate hike, but not exactly. They've just given the yield or 10-year bonds a little bit more breathing space, which kind of acts in that fashion. So there's really not likely to see rate increases, but they are taking on other kinds of actions to try and manage the yen and the yen in general. All right. Simon, for the Kiwi dollar, same thing, very similar to everything else. Aussie dollar and Kiwi dollar with that alignment or correlation. So we're looking for that downward move or that quick reversal towards the downside. But if you're super risk adverse, then I'll be looking for it to retrace. So if you're at risk seeking, you could look for that to break towards the downside. If you're more risk adverse, I'll say retrace, bounce back up, and then look for that upward move towards the next key resistance of about 0.6482 or 0.65. Alright, so with that said, let me know, put it into the chat. I look forward to it. Has this session been helpful to you? Have you got good information? Arfan has already said it. You're most welcome there. Arfan, positive impact on emotions. Been a great session. Thank you all so much. I look forward to your feedback. Put it in the chat. Let me know. And please remember, trade well, trade safe, and I'll see you again. Take care now. Bye.